Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the FX majors and the dollar index going into the week 26th of August 2019. We had Jackson Hole on Friday, Powell speech coming in around about 3 o'clock UK time. Saw a strong move lower in the dollar index. We've then had the G7 meeting over the weekend, and we've seen the dollar actually open up surprisingly high. We've actually had a gap open, and we've continued to move to the upside, which we can see here on this intraday chart. So that was basically the close on Friday, and then we've had a gap open here. Now, gaps have a tendency to be closed, so with Friday's price action posting a bearish outside candle, as long as that high trade holds, then our immediate bias is still to the downside. What I do like here, and we're not going to run through all the time frames, we're just going to go to the ones that which we regard to be the most important, is the fib levels. So we've got a fib level here, 95.86. That's a congestion point or a previous swing low, so it was support, should be support again. We've got bespoke support located pretty close there at 95.98, so we've got nice confluence area around that level. And then if we look down to this level, around about 94 the figure, and then we've got our bespoke support at 93.55. We do like it when the fib levels line up, and we have a tendency to try and play that trend. So at the moment, after Friday's price action, like we said, we are bearish still on the dollar and looking at selling into dollar rallies this week. If we go back to the euro dollar chart and just this time frame first, this is the weekly time frame. We're in a wedge formation. Wedge formations have a bias to break to the upside. We did post a morning doji star pattern. That pattern often indicates the end of a trend and the start of a new upward bias. We did hold that trend. We haven't breached the low of that candle, and we saw some upside movement obviously on Friday. Now if we go to this time frame, and again this is the intraday time frame, these fib levels line up pretty well with our bespoke resistance. So 113.66 and then up here at 116.91. So again, as long as that bullish outside day that was posted on Friday remains intact, then we will be looking at buying into dips. Cable, 261.8% fib, located at 120.33. There was a DMARC 13 count, often indicates the end of a trend and the start of a new upward bias. We're going to get these right today. 119.94 was the DMARC stop, so it did hold, and we've seen a move to the upside. If we go to this time frame, this is the intraday time frame. Here we have broken out of a head and shoulders formation to the upside. We've seen some corrections lower. As far as Elliott wave is concerned, we've probably just got a bit of fourth wave consolidation here. The measured move target is 123.33. Again, what we like here is the fact that 261.8% fib level, 124.28, is very close to our bespoke resistance at 124.11. Dollar Swiss, what time frame to look at first? I think this is the most important time frame probably. This is the weekly chart. Wedge formation breakout to the downside. We've seen some pretty mixed and volatile trading. Now, we had a decent sell trigger on Friday, and we actually ended up making 4R on that trade that triggered to the downside. 97.40 was our target level. And we've seen this quite aggressive move back up. Now, levels outside of the weekly Ishimoku cloud continue to find some buying interest, but the formation has a measured move target down here. Thinking about the dollar index, our bias really still remains to the downside with the next support level not really seen until here, which is around about 96.50. Dollar yen, pretty mixed volatile trading again. Levels close to previous swing low and outside this channel formation have found some buying interest. Today we had some resistance at 106.01. It actually spiked higher to 106.40. I think that we're still looking for lower levels. It's a pretty complex wave pattern. but even an ABCD corrective formation takes us down to around about 103.75 near this fib at 103.30. So at the moment we're still looking at selling into rallies, but signals are far from strong in dollar yen. Now here we've got mixed views. This is dollar CAD. Expanding wedge formation has a bias to break to the downside. For the last 4 weeks or 3 weeks completed, and then again today in Monday's price action, we've seen levels outside the Ishimoku cloud finding some selling interest. If we go here, this is the intraday chart. Look to be forming a bullish a bullish triangle formation that has a bias to break to the upside. Levels close to the trendline support at 132.74 have found some buying interest. We haven't really got support until 132.54. We will be looking at buying a dip at that support probably tomorrow if we get some exhaustion counts, etc. But at the moment, this is looking quite weak, this trend, and it is starting to falter, and that actually can be seen by a drop off in the strength indexes as well. Aussie dollar. And again, quite like this one for a move to the upside. Obviously, if Aussie dollar, Euro dollar, Sterling dollar, all those dollar-based currencies move higher, Aussie dollar, Euro dollar, Sterling dollar, Aussie dollar move higher, then dollar CAD in respect should move to the downside. So again, using just correlation, dollar CAD is moving away from that bullish concept, if you like. At the moment, that dip lower has been bought into. An AB CD formation is located at 68.31. However, these fib levels are pretty close to our bespoke resistance level, 68.87, and then all the way up here at 71.13. So the bias for us is bullish at the moment. Euro sterling 5-wave count to the downside. I'm looking for a head and shoulders pattern to form. We did see a mild correction close to the channel top. We actually had some bespoke resistance today at 91 the figure, and we saw a 91.09 high. However, what normally happens after a 5-wave count is a very choppy 3-wave count to the upside. This is the favoured level at the moment. We've got bespoke resistance at 92.06, and then we've got a 61.8% fib level located at 92.12 this week. Euro yen expanding wedge formation looks to have completed a bearish wave count to the downside, close to the 261.8% fib at 117.42. Today's price action is likely to form a bullish outside candle that often indicates the end of a trend and the start of a new upward bias. If we get a strong move to the upside in euro yen, and I don't think we're going to immediately, you've got a massive area of consolidation here, and we could see that be mirrored to the right of this formation for probably the majority of September, and possibly form a reverse head and shoulders pattern, but this could well signal a low trade in euro yen, and I would expect that move higher when we do eventually get it to be euro based or not euro strength, not yen weakness. Okay guys, I hope you've enjoyed that video analysis, and we'll be back soon with some more. Many thanks.